Alrighty, so as I was saying before, if you want to make consistent profits, you need consistent actions. You need to build a solid foundation for how you approach the markets every single day. For the way that we trade in algorithmic, we always start with market structure. That gives us directional bias for the session. It allows us to know where is the direction that we're going to be trading in. Once we have defined that, then we use supply and demand zones, institutional supply and demand zones, to help us pass time that market direction is buy straight, because if we're bullish, we need to wait for the price to pull back for that high availability areas that we think that reversal will take place. The next layer of analysis on top of that is then liquidity concepts with the mechanical way in which we use that. And that again helps us just with refining and timing that overall trade idea. Okay, so once you get all that in place, this essentially gives us the intro, and we're in a position to manage it. Trade management is the last thing we want to think about. Market structure is the very thing and the main thing. So look at that, and this is what I'm going to cover it in today's lesson. So look, just going to start off with the basics for a couple of minutes. If you're a bit more intermediate or even advanced, we're going to get into something advanced structure concepts pretty quickly. So bear with me for a couple of minutes and we get into it. So left hand side, right, if we are in a bullish market, for example, price will make a series of higher highs and higher lows. Okay, so pretty simple stuff. Now every time that we have a break of structure, break of a swing high, we immediately need to start thinking, okay, at some point that swing pullback is going to start. So we're going to, when we have a break of a high, instead of thinking we're going to the moon, we need to do something on the opposite, thinking I need to be prepared for that pullback to happen. Value. Okay, so now when we get that break of structure, this down becomes our new swing low, right? Because this is the low that led to the break of that high. So when price is at that point, we can now draw our new swing range. This is the new range that we're going to work on. It. It's a bullish range. After the break of structure, what we expect price to pull back. When price is moving down, we can look to short this and we can look to pull back. But because we understand that we are in a bullish on a swing range, we know that this is a strong low. It's a nice job, and therefore we expect that price will not trade lower than that low. Okay, because the bullish for the market to continue on a higher time frame, that low should be respected and should hold. So we can play the pullback, but we know the price shouldn't be that low here, and we look to try to capture that next pro trend run to the upside run. We target this week high over here because we expect it to fail once the pullback is over, and we look for the new high. And this is just the same framework again. After break of structure, what do we expect? We expect a pullback, right? When that break of structure happens, we identify where our new swing low is. This is our new swing low, swing range, okay? And now we're working within this bullish range, so we can play the pullback. We expect the low to hold, and we look for the new run. Nice and simple on this regard, and this is the exact opposite on the bearish market. Lower lows, lower highs, lower lows, lower highs. That high, that is a job, cause the break of structure. After we get that break of structure, what do we expect? We expect a pullback. So we start thinking about that pullback here coming in. So we can play, look to buy, but what we expect this high to hold. And this is a strong high, that is job because of break of structure. Therefore, we can look to play longs, but no further than that high. And then ideally, we want to be catching that pro trade and run when we're targeting the weak low. Why is that weak low? Because it's a weak low because it failed to take the high. So the whole idea because market structure is that you want to be trading from structure, shorting from the strong high with our protection and targeting the weak low. So because it's failed to do its job, and get your head around that, it really it will really make it more complicated. But this is the basics, and this is just in the simple terms we want to identify whether we're bullish or bearish from a market structure perspective, and then identifying where is the strong structure, where is my weak structure, and where are we trading from strong targeting weak. And if you do that over a large sample size trades, you're going to be on the right side of the market far more often than enough, making your life much more easy. So this is quite a basic diagram. Markets look a lot more massive in times in bullish structure here. Sometimes we have it a bit more complicated. So same framework every time. we're in nice bullish market. After swing break of structure, what do you expect? We expect a swing pullback, but we expect that strong low to hold, right? So we can look to play the pullback to the low. Then we want to try to capture that next bullish swing to the upside. What do you know? After the break of structure, what do you expect? We expect the swing pullback on this time frame. Now, let me bring it one step back. When we have this break of structure here, you get that new boss break of structure. BOS. First thing you want to do is go back and where is your new swing low? Because we're back here pricing. This is the swing low, this is the swing high, and we were trading between those two red lines. But when we get a new break of structure, boss, that means that we're working with a new swing range. So moment that you get that break of structure, you want to look back and identify where is our new swing low. Okay, so the rules that we use is swing low is in a bullish market is always the lowest low that caused that break of structure. Okay, so from the previous high there, we want to look back and find the lowest point, and that's the lowest low. So it's kind of obvious in this example, but sometimes in the market it's not that clear. Quick tip if you want to use, if you're not sure, take a box like this, broken, and drag your box down, and then your new swing low will always be the lowest point within that box. It's the same as the Gantt. Reason why this is important is so many people got wrong in the market is they identify the break of structure and they all see the price pulling back, and what do they do? Oh, price came down now and it's broken this low here, but this low to the left. They now think that we're in a bearish market. May not be shorting, and they're looking price to come up into here. Maybe they got the supplies on and they want to get short, and then what happens is they get smashed, right? Because why does that happen? Because we're in a bearish market. I'm trading in like a trend. Why am I keep getting any out of the other side of the market? Because you didn't correctly identify the true swing range is. And why is that? Because this is the true swing range. Not that we always take the lowest point. So when we get the break of structure and we identify the new range we are within, okay, we understand that we're just playing the swing pullback at this point, and we actually expect this strong low to hold. And we are anticipating that we're going to get the bullish leg to the upside. It's simple but powerful things, and this is the things that can give you the basis from a framework to trade with confidence and having extreme clarity of what your primary expectation is and how price will behave. Something with probability is this is not going to give you 100% strike rate, but it will, how you lay down the framework to have the basics to know what to expect, so you know what the bias is actually when you're dealing with multiple times. Let me show you how we can handle it. Just think what we went through from a swing perspective at one time frame at 4 hours, in this case high time frame. We see that we're in a clear bearish market, right? We have the swing pullback and then we get a break of structure. So as soon as we get that break of structure there, the first thing we want to do is look, where was the highest point? Caused the break of the low. Here is the new swing high. So we expect this high to now hold. It's a strong high. It's done its job. What's the other thing we expect? We expect that swing pullback to kick in. So not going to happen straight away. Expect a bit of better pressure, but we anticipated that it's going to kick in at any time. So let me get in another break of structure. Similar thing, we identify the new swing high. This is the new swing range. Break of structure, what we expect. Break of structure again, new swing high. And always be aware where your current range is. And this is why I draw this on the chart live with you guys. And I think you guys kind of get the picture with this, and then borrow to death with this, but we continue getting lower highs and lower lows, and then we eventually, the market obviously is going to trend in one direction forever, so we get a shifting structure. Since we get that higher high there, the market has now changed. We're now instantly into a bullish market, into the 4-hour chart. So what do we expect? We expect this swing pullback, but also we identify the lowest point. This now become a strong low. When we trend into the downside here, all these lows were weak. Why? Because they never broke the swing high. They never broke it out. But this low down here, it's a strong now because that one caused a swing break of structure. So why is this so useful information? Well, it means that it could place shorts here, but we understand that as we come into that strong swing low, we expect the pullback to end. We expect that low to hold, and we're expecting the next leg to the upside. We're going to target the weak high. And so We get another break of structure. Sorry, this becomes our new swing low. Play the swing black, we can play it. We're not going to target past this low. This is a strong low, and although, as we can see here, price actually can be a bit tricky sometimes, but never default. But it gives us confidence that ultimately, whatever price does there, we still accept that it doesn't trade lower than that low, and that's really useful information to help formulate the trade ideas and trade confidence that you're expecting that high to break, because that high is not breaking the swing low to the left. Broke this one and this one, but this is not relevant for the string structure. And then again, the market continues on. And now that's reasonably simple swing structure, but there's going to be times where the market is going to be more volatile and there's complex prices within. We used to get shopped around a lot, but now we have a more advanced framework to help. So we get internal and something called fractals. So start with the swings, internal and fractals. So the main and most important structure is our swing structure, and that is this red line I'm about to draw there, where we have that big swing pullback, and we have that swing break of structure, and essentially this is our swing low, and this is our swing high. Okay, so I'm sure some of you will have experience in the market. Sometimes we get this big impulsive, it's almost straight moves to the downside, and then it ends up giving us a big range to work on. That because we have a big range, what happens is that price can form complex structure within here, and we need a framework to know how we deal with that price action, so we can essentially trade the internal trend that forms within the larger swing range, which is the higher time frame. So you guys should now be comfortable on how we map our swing structure. Next layer we would need to learn at is the internal structure, and that's essentially these ranges here that I'm mapping here. This is what we call the internal structure, and it's the swings within the lower time frame. So this is our swing high, this is our swing low. So let's put it a step back and I'll build a story, and you'll start to see how it all makes sense. So we're in a bearish swing range, gonna swing pull back, and then we get our swing break of structures to the downside. This becomes our new strong swing high. Yeah. Now, after a swing break of structure, what do you expect? We expect a swing pullback. So sometimes what you get is that you get tiny little pullbacks that suck, and they're not big enough to call a swing structure relative to this price action. It's not significant enough to be a swing structure. So what we do is we call this internal structure. When we have a tiny little internal structure, and then we continue that overall swing leg to the downside. The signal that we use from a structural perspective to tell us that that large swing pullback is starting is we want to see that internal break of structure to the upside, right? So we want to see that internal shift bullish, what we call it IBOS, an internal break of structure. Now this is a very strong internal confirmation that the larger pullback is now starting, and we can enter. This becomes our internal low, and it's the exact same framework. Now we look to play the internal pullback, but we expect this internal low to hold, and then this is a really high probability buying opportunity to play this swing pullback in line with the bullish internal trend. Okay, so we're in a bearish swing trend. We look for the internal structure to shift bullish. That then signals the start of a swing pullback, and now we can follow this bullish internal structure to play that swing pullback. Okay, we expect this strong internal to hold. Price comes back in, we can look for longs, turn the weak internal high, and this is all the same framework, just applying it to the structure within the swing structure. So it says like multiple layers, like a bit like a movie Inception. When the internal structure changes trend, then signals the start of a initial of a pullback. Now we're playing the pullback, playing pull up to the strong swing high. We expect it to hold because it is its job, it's a bearish. So now as swing pullback is over, the structure confirmation we look for is in internal structures to then shift bearish. That signals the start of a bearish trend in a internal market structure. We expected the internal high to hold, and this is a very high probable area to get short because it's pro-internal trend, pro-swing trend, and now what we target is down to the weak internal low because it's failed to do its job, failed to break the high, and keep following that all the way down until it takes out the weak swing low. Okay, so if I can summarize this in the most simple fashion, because it might be a lot to take in, we're in a bearish swing trend. After a swing break of structure, we want to play the swing pullback. We wait for the internal structure to swing bullish. We get confirmation we want to get long. We follow the bullish internal range. We now pull back up to the area in which we expect price to now reverse, because we expect the swing pullback to end before it hits the swing top. And now we follow the bearish internal ranges, shorting from the protected strong highs. Target is the week's lows until we take the week swing low all the way to the downside. Then we get a swing break of structure, and we just repeat the whole process again and again and again. Yeah. So this is just a really strong framework to really allows us to map the market, and we know every time what were the phases of the market, what direction the bias we have, and when we expect price to reverse. It's super, super powerful once you get a head around it. Now, there is the third layer of structure, and this is what we call fractal, which is actually the lower time frame, very little price movements. And this is the most aggressive type of structure. M5, M3, and M1 can give you a lot of signals, but it can give you a lot of false signals. You gotta be careful with this stuff. When we cross fractal, it signals the start and the end of an internal pullback. So remember, within internal structure, M15, that signals the start of a swing pullback. The fractal is the internal of the pullback. When we get this swing move to the downside, and we're looking for that swing to start, the IBOS will signal, it gives us the signal for it to start. So signal, IBOS, pretty good confirmation, so it started. Down here, when you got the fractal change of character, when we get the fractal change in trend, which call it the shock, right? CHOCH. So fractal structure shift is bullish. We cannot say high converge that the swing pullback is starting, but we can say at least the internal pullback is starting. This is the first sign that there's an internal reversal. Okay, so then we can get the bullish IBOS. After bullish IBOS, what we expect? Internal pullback, so that fractal structure changing trend, that change of character, again, shock, now signals the internal pullback started. But what we expect? We expect the internal leg to hold, so we just expect to play the internal pullback, and when the internal pullback is finished, change of character. We look for the fractal change of character. At that moment that we have a change of character there, we now know that it's very likely, not guaranteed, but very likely that now we can look for the next bullish to the upside. Same thing for the IBOS. Signal, IBOS, change of character. Now we can target the weak high. In a bearish trend on the mid-time frame, this will not take the top very, very rarely. And you don't have to wait for, say, the bearish IBOS to appear to get short and target the low, because if we come into the strong high, you guys will learn the next few lessons on supply and demand. Got a change of character up here. We can get it early, as you already know, in anticipation that we're going to get bearish IBOS and play these move to the downside. So hopefully this will start to make sense, and wish this has many times that you need, and we're just going to give some examples on the chart, right? All right, so a few examples of simple examples of swing structure. Like I said, sometimes we get these big volatile moves after the break of structure here. Price kind of free falls in a bit, kind of not get any significant pullbacks until here. What does that mean? It means that after the break of structure, we look back, what was the highest point that it took the higher low? That was here. This is the swing high up here. This is our swing low all the way down here. That means that now you have a massive swing range to work with. And this is why we use the three types of structure across three different types of time frames. 4 hour, M15, and M3, M1. It's perfect. So now we look at the fractal structure within that, right? So let's dive into it. We got a swing break of structure down here, and we get a bit of a pullback, but it's not significant enough relative to the recent price action, right? So these are actually the large pullbacks that we're looking for. So this is the actual 4 hour chart, and this is the continuation of that bearish internal range, and we continue down, and we'll have a pullback, and we come down, and then eventually we have that bullish. So if we remember the framework right, when we get that bullish IBOS, what does that signal? It signals, okay, now there's a swing starting. So now we get that bullish IBOS at 4 hours. This becomes our strong internal low. So after the IBOS, at some point, we can expect that internal pullback to happen. Now let's just zoom out a little bit. Looks like there. Let's see. Confusing to get initially. Head around. Okay, this is our swing high. This is our swing low. We had the bullish IBOS. So now what do you expect? We expected the internal structure to remain bullish to play that swing pullback, and then eventually when the pullback is finished, we then look for the internal structure to shift bearish. And at that point, what we know that the swing pullback is finished, and now we know that the market is looking to take out this weak swing low because it's bearish 4 hour. That's the overall framework. When we are within get that bullish eyeballs, we know that internal pullback can kick at any moment, and that's where we look at the fractal structure, the lower time frame, to signal that pullback is going to start. So now it's beyond the scope of this lesson, so exactly how we map fractal structure, but we'll go in another lesson to actually go into advanced market structure and actually take it on. This is just the basics of it. So if essentially we look for these shifts in structure and eventually we get that pullback, right? We expect price to get another bullish leg to the upside, and where we get a bullish change of character. This is when the fractal signals the end of the internal pullback. This is basically this part here, that mapping, and we got that, and now we look for the target, that weak internal high, right? And now we had another bullish internal IBOS, identify the lowest point, that took that high. And this is our now new range. Always want to identify what is the current range that I have to work with, and then you can identify your trade ideas from there. So we know that we're in a bearish swing range. Now we're in a bullish internal range. Now we're going to shorten to the internal low. Then we look for what? We look for a bullish change of character there, and internally this signals the end of the internal pullback. And then what do we look? Longs through there, and when we're targeting that weak internal high, bullish internal range, look for pullback, bullish change of character. Now we know the internal pullback is over, and now we're going to look for longs to take the high. And this is rinse and repeat, same framework till we reach that area. Supply and demand and other concepts in a bit, but we can anticipate that this swing bat is over. The internal starts to shift bearish, and now we're really ready to take that lower long. We're going to go for some examples, but go and apply it to the charts and backtest it. Bearish swing range, we got the bullish eyeballs playing the pullback, and then we can look to follow these largest bullish internal ranges, and then eventually we end up getting a full-on swing reversal. Super powerful, right? We get play the pullback, then we get the bullish ninja character, signals into the internal pullback, and now we got to look follow it up to here, and then it gives us so many trade ideas. It's just so. Hope you took some value for now. I hope for you learn some new things. Can be a bit overwhelming at first to get your head around this, but I promise this framework is so powerful, and the basics to get. Every morning I come to my charts, that's the first thing, as you notice, what I'm looking at, working my way down, understanding the market structure of currently what's going on. When you currently have your structure market correctly in this mechanical way, you can identify your directional bias for the session and make your life so much easier. So this way we can actually layer down our supply demand, look at the time, the trade ideas, introduce liquidity into the trade ideas with increased accuracy, and that is how we trade professionally with the approach that we use. So I'm excited to get into the rest of the juice with those lessons. Get your eye on the next lessons, and keep your eyes sharp. See you next time.